Hello and welcome to the show. Today is July 17th, 2022. It is a Sunday, and I know there was a lot of talk or a lot of interest about the MMTLP NextBridge S1 that was filed recently, and I made a video about that. But there continues to be a bunch of questions, so I'll probably make another video to clarify with whatever understanding I have about the situation. But for now, this video is about GameStop and the split-via-dividend. Okay? So let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So let's talk about GameStop. First off, a big shout out to this guy, Richard Newton. I came across his channel where he compared Tesla to the GameStop split-via-dividend. He did this a few months ago, or just about a month ago or so. Or two, and on May 15th, and it was pretty good. He had some good insight and information, so that led me to have a look at what I think the situation is. Check out his channel, check out his video. It's pretty good. Richard Newton, I believe. Okay, links will be provided, of course. So let's have a look. If we go back in time at the SEC website around August 11th of 2020, we see that there is a Form 8K that was filed. If we drill down into the Form 8K, Tesla announces a 5-for-1 stock split. And they said Tesla today announced that the board of directors has approved and declared a 5-for-1 split of the Tesla's common stock in the form of a stock dividend to make stock ownership more accessible to employees and investors. Each stockholder of record on August 21, 2020, will receive a dividend of 4 additional shares of common stock for each share then held, to be distributed after the close of trading on August 28, 2020. Trading will begin on a stock split adjusted basis on August 31, 2020. This sounds very, very eerily familiar to what's going on with GameStop. The dates are different, of course, right? So anyway, so let's see. So the filing was on August 11th. The date of record is August 21. The dividend would be distributed on August 28th after the close of trading. Bad spelling mistake there. And the first day of trading on a split adjusted basis is August 31st, which, if we look at the calendar, is just the day after the distribution, right? So the date of record is on a Friday. The distribution is on the following Friday. And the first day of trading is on the following Monday. Okay, so that's what we're seeing there. Now, let's look at the Form 10Q prior to that announcement, and with that we can see that there were 186,361,726 shares. That's a fair number of shares, and if we just multiply that by 5, we'll see that there will be close to 1 billion shares after the split, right? It's just under 186 million. It's just 186 million shares times 5 is about 931 million shares, 932 million shares. So it's about just under 1 billion shares right now. Okay, and there was an article by Forbes, I believe, that came out just before the events took place. It's a good article. Links will be provided. Check. It's a very good read. I would read it because it gives you an indication of what people think prior, what may happen prior to that split. Okay. Anyway, it's in that article there was a line that I'm taking out. It says retail shareholders do own a relatively high proportion of shares in Tesla compared to most comparable companies. The company has over 30% retail shareholding, compared to Amazon at 10%, General Motors at 15%, etc., right? Tesla remains one of the most popular stocks held by retail shareholders on popular trading platforms. So we're going to add that to our list of things that we're holding out about Tesla, right? So we know that there's about 186 million shares before the split. It's going to be under 1 billion shares after the split, and we got over 30% retail shareholding, okay? So let's see what happened to Tesla, right? We look at TradingView, and on August 11th, when the announcement, when the split-via-dividend was announced, we saw a rise in share price. It went up steadily, all the way up until August 31, which was the date of the split. And that rise was something around $225 or 82%, right? And took place across 21 days, okay? After that, it dropped significantly, right? I mean, it rose up, went up dramatically. 21 days it took to rise. This was all the way up until the split actually happened. And then it dropped because of the split, right? And then it went sideways, okay? And it went sideways for quite some time, 76 days, right? So a lot of sideways actions. And then something interesting happened there at that point. A dramatic amount after that, right? It just exploded, actually. So if we look at the amount it went up about 117%, or it went up $477, and it took 52 days to do that. So it went up over a fair amount of time, and it went up a huge amount, right? $477, and it got as high as $880.02. And if you look at the total amount of time it took, in terms of the going sideways to like heading up, it took about a little over 4 months, right? 76 days and of sideways action, followed by 52 days of massive rise, and that's steady rise, right? Massive steady rise, and in total about 4 months. So it went from 274.88 to 880, which is a total gain of about 220% over 4 months, let's say, right? So that's a fair amount that happened as a result of that split-via-dividend for Tesla. So we know that GameStop, of course, announced a 4-to-1 split-via-dividend, and their wording is eerily familiar to Tesla. I'll just read it. GameStop today announced that its board of directors has approved and declared a 4-for-1 split of the company's Class A common stock in the form of a stock dividend. Company stockholders of record at the close of business on July 18, 2022 will receive a dividend of 3 additional shares of the company's Class A common stock for each then held share of Class A common stock. The stock dividend will be distributed after the close of trading on July 21, 2022. Trading will begin on a stock split adjusted basis on July 22, 2022. So, if you look at the two announcements between Tesla and GameStop, they are very, very similar. You would think GameStop, used Tesla as a template even. Maybe they're trying to do the same thing. We'll see. So, in terms of the filing announcement, if we just put that into context, we know that on July 6th, it was the SEC filing an announcement for the split-via-dividend. Took place. It's a 4-to-1 split as opposed to a 5-to-1 split. So existing shareholders will get 3 additional shares. The date of record is July 18th. The dividend distribution will be on July 21st after the close of trading. And on July 22, the first day of trading begins on a split-adjusted basis. And with Tesla, we had over 30% retail shareholding. And so what's the deal with GameStop? Is there going to be something similar? I don't know. Let's look at the number of shares of GameStop. We know that Tesla had almost 1 billion shares after the split. Well, GameStop has a lot less, 76 million shares they're starting with. And multiply that by 4, that takes us to about 300 million shares. So it's a lot less than 1 billion. It's about, a third, third of the way there. And so that 76 million shares comes from the Form 10Q that was filed, and that's as of May 26, 2020. May 26, 2022, there were 26 million shares, okay, as announced by GameStop, okay. Now, what about retail shareholding? We know Tesla had over 30% of retail shareholding, so what about GameStop, okay? Well, let's have a look. This is a website called Computershared.net. Links will be provided. The interesting thing about Computershares.net, it was originally developed to, so people can have an idea of how many shares of GameStop were directly registered, right? So if we look at Computershared.net, they have, if you slide down, they'll have a chart that says total DRS estimates, and it gives you an estimate of how many shares are DRS'd at the current time. And the three white dots are the actual recorded number of shares that were DRS'd at given points in time. So their estimates came pretty close. So I think this DRS.net it's a good calculation of how many shares may actually be directly registered. That's what DRS means, by the way. So let's get back there. So if we look at Computershared.net, we see that their numbers are pretty close, but they're not quite exact, right? They're saying that the number of shares issued was 75,900,000. We know that the actual number was is 76,129,034, but they're very, very close. It's not quite exact, but very close. Close enough, close enough, I'd say. Their estimate of the total number of retail shares is somewhere around 33 million. Okay, now they've got very good estimates on institutions, about 13 million. Mutual funds are holding about 8.4 million, and ETFs are holding 6.6 million or so, right? With insiders holding, according to their estimates, about 13.23 million shares, and that's where they come up with their remaining shares for retail of 33.8 million shares, right? Compared to the total number of shares of 76.1 million, that means retail owns 44.4% of all the shares, period. All the shares, right? But it's it gets even more interesting because, of course, although retail owns 33.8 million, retail is also directly registered 16.4 million. So if you take the retail minus directly registered, that's 17.39 million, or about 17.4 million. That's the number of shares that retail could possibly sell. Do we think retail is going to sell that? Hell no. But that's an idea of what's called the float, right? That's the amount people could potentially buy from retail. But that's if retail sells. Retail is probably not going to sell. But there's only 17 million shares available, right? 17 million shares available because everything else is held very tightly, right? It's held very tightly by insiders. They can't sell because they have blackout periods and all that. They legally can't sell. Okay. Institutions, mutual funds, and ETFs generally don't sell their stock. They generally hold it for the long term. Okay. So that means that directly registered shares are also held for the long term. So there's only about 17.4 million shares that could possibly be bought. Okay. And that's the float, and it's a pretty small number as far as I'm concerned. So basically what that means is retail ownership is actually 44.4%. So that is higher than Tesla, right? Because if we look back at Tesla had about 30% or greater than 30% of retail ownership, according to the Forbes article. And if we put Tesla and GameStop and we combine them, if we just put them side by side, we can see that GameStop it's got a lot fewer shares, okay? The split is by a smaller amount, and the retail ownership is greater. It's much larger, right? But it's still a split via dividend. Not only that, GameStop has also announced an NFT marketplace, and this happened about a day or two afterwards, in terms of business days. And an NFT marketplace is basically it's a place where people will trade non-fungible tokens or crypto. This has been a pretty big market, and the biggest NFT player today is called OpenSea, and it looks like with the rapid acceptance of GameStop, it looks like GameStop will overtake OpenSea and become the number one preeminent place to trade non-fungible tokens. How much is OpenSea worth? And GameStop will probably exceed OpenSea, right? OpenSea is today worth $13 billion. Well, OpenSea at last valuation was worth around $13 billion, right? OpenSea is not tradable on the open market. It's pre-IPO, of course, right? But it was worth $13 billion if you could get the stock, right? And GameStop is how much are they worth? Well, if we look at their public information, we know that their market cap is $10.78 billion. So about $10.8 billion. So we add $13 billion to that because this will be an accretive valuation, I believe. As a result, it should be worth GameStop should be worth in total about $23.8 billion. Split that across 76 million shares. That's about $312 a share of value just from the non-fungible token, right? Which the NFT basically is worth a 2.2x gain, is the way I look at it, right? So that non-fungible token announcement with GameStop overtaking OpenSea, they're basically gonna take over and exceed OpenSea. So they're gonna keep going, because if you think about it, non-fungible tokens have a much bigger impact in the video game industry, right? You can trade NFTs for special game functions, special game abilities. You can get a sword that does some cool things, and because it's a marketplace now, that video game sword that works in I don't know, in World of Warcraft, say, or some video game, might also be traded with another item that somebody else has from a totally different video game, right? Like possibly, a spaceship in some space video game, right? So now you can trade your RPG sword for a spaceship, right? And that gives them both much more value. So it actually fits really well with the whole GameStop environment. GameStop is the first company that allowed people to sell back their video games to the store in exchange for, so that they can actually buy new video games. They have a secondary market for video games in GameStop, and GameStop makes a fair amount of money on that. And they're gonna do really well with this NFT marketplace. I'm guessing it really fits really well in. So if we think about GameStop, if they repeat Tesla with the 4-to-1 split via dividend, Tesla did a 5-to-1. You could get a 3x gain from that, right? Tesla was starting at a much bigger valuation, and it gained about 3x, right? But for GameStop, it's probably going to be more than that, right? But it's 3x if it's similar to Tesla, but it could be a lot more because it's starting from a much smaller number of shares, and retail holds a lot more, and retail has also directly registered a lot of shares. The NFT marketplace is equal to a 2x gain, let's just say, right? And as we know, NFTs are very well suited to games that could be even bigger than 2x. So who knows? Let's just say 2x for now. 3 times 2 is equal to 6. So you're talking about a 6x gain possibly. But if GameStop has a 6x gain in price, that means that there could be a short or gamma squeeze, right? Because, current price is $144. Its current price is about $140. 6 times that would be, a lot more than their last all-time high, which triggered a short or gamma squeeze. And if we get a shorter gamma squeeze, that means we could get anywhere from a 5x to 20x gain on top of that. So that means we're possibly looking at a 30x to 120x total gain. Okay, and if you get that kind of numbers, you're talking possibly triggering the MOAS, the mother of all short squeezes, right? So it can take off from there even more, right? The whole system could at that point, just totally break. Prices could go astronomical, right? This is the calendar. This is where we're at. It's Sunday right now. Again, we're expecting, the kind of stuff that we're expecting is we're in the run-up phase, right? So we're expecting a run-up, This is what Tesla did. GameStop could do something similar. If it follows the same pattern, there's a run-up, and then there's a drop right after the split and sideways action, followed by a massive increase. And that sideways action could be anywhere from, 76 days, followed by a massive increase. It could take, in total, about 4 months for this whole thing to actually get to where it wants to get to, right? And don't forget, GameStop also has the NFT marketplace. There's a possible short gamma squeeze, that's involved in there. And if that short gamma squeeze happens, then there's a possible MOAS, mother of all short squeezes. So it's a huge opportunity. It's a huge possibility, right? Anyway, thanks for watching the video. That's basically what I'm thinking. Well, let me end by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is July 17th, 2022. Thanks. Goodbye.